Time now for an in-depth look at the market news on this Friday afternoon. And for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
Well, there are still concerns about second waves of the coronavirus in many countries, to be sure, but stocks on Wall Street were up Thursday. The U.S. eased regulations on where and how banks can make investments. What's the story in the global markets?
Yes, as you said, U.S. market closed deeply in the green with a late session rally led by the bank shares as the regulation news outweighed the domestic uncertainty over the rising COVID-19 cases. If you look at the policy side, U.S. banking regulators will loosen the restrictions from the Volcker rules, allowing banks to make bigger investment into venture capitals. Shares of the banks, including JP Morgan Chase, Goldman Sachs, Wells Fargo, and most of these companies sharply rose after the announcement that affected the overall market to rise. If you look at Dow Jones, it added 1.2%, S&P gained 1.1%, and NASDAQ also jumped by 1.1%, breaking above 10,000 mark again. Overall, this is affecting positively in the global market. We are seeing European market also rising today. Most of the Asian market also following the suit.
Right. Korean stocks were higher today, taking their cue from Wall Street, as you said. Tell us about the local markets.
Yes. Korean market, as for the Kospi, it was up about 1.1%, but the Kosdaq pretty much closed at flat. The Korean market's been quite volatile this week. We had seen a plunging by about 2.27% in the previous session, and overall it's lower by about 0.38% for the whole week. Investors have been quite confused in terms of a lot of the numbers are coming through. Economy seems to be weak condition. Overall, COVID-19 cases rising rapidly, whereas the continuation of boosting measures coming from various economies of various countries, particularly from the U.S. as well as China. So all being said, I think that the volatility of the market will probably remain so over the next a few weeks in the future, given the fact that we're not going to get much of better economic numbers, and also we will probably continue to get these COVID-19 numbers that is not necessarily positive. And because of that, even though that we are seeing continuation of the massive boosting measures coming from the various governments, the Korean companies, Korean equity market as well as companies will probably show some volatility in terms of the share prices in the future.
Big news this week, Mr. Yu, with South Korea announcing taxes on investment gains across the board, but with an exception for amounts under 20 million won a year. This is set to start in 2023. What does this mean for investors, and what effect do you think it'll have on the market?
Right. As you said, it will start in 2023, so we got a few years left. And because of that, it's not going to affect the market much at the current point in time. But if they are going to charge 25% tax rate on the capital gains tax, most likely we will see a massive market decline, probably by sometime in the second half of 2022. Clearly, this measure is not necessarily positive. We are seeing massive injection of the money going into the Korean equity market by the retail investors. And most of these retail investors are buying Samsung Electronics and various other companies that are undervalued. And the stock price has been moving nicely upward trend. But obviously, they're not going to pay any taxes in regards to that. But by the time you get to 2022, we will see probably a massive decline in stock prices. We've seen that kind of case in Taiwan in 1980s, and we had seen like Taiwanese market falling by more than 50% in a very short period of time because of the capital gains tax were introduced. We think that similar kind of impact will have. Now, in terms of though, we're not sure exactly whether this will be set in stone. They are getting some advices from various other sides of the industries. So we will see. But anyway, what has been announced is that they will raise the tax rates to as high as 25% on capital gains, but they will have redemptions up to 20 million won of the capital gains. So you do not have to pay taxes up to that amount, but anything above that will be taxed. Also, one side of tax cut is on the transaction tax, which was lowered not too long ago. They will be lowering that to as low as 0.15%. But it's not like they're getting rid of it. So it's kind of double taxing in a sense. So this is not going to be taken positively in terms of the long-term trend for the Korean equity market. I think that this regulation might change, but we're not sure whether or not this will be implemented as it's announced. In any case, I don't think that this news is positive for the equity market.
Well, it'll be fascinating to see how it works out in the end. Mr. Yu, thanks so much for coming on today. We appreciate it.
Thank you very much.